This is Nightly Business Report with Sue Herrera and Bill Griffin.
Cool reception. The S&P 500 posts its biggest decline in nearly 2 months as investors look to avoid the December disaster of last year.
Click and shop. Americans are expected to spend a record amount online this Cyber Monday, and some early winners are best known for their brick and mortar stores.
Money-saving moves, some tax tips to help you get your financial house in order before the year is out. Those stories and much more tonight on Nightly Business Report for Monday, December 2nd.
Good evening, everyone, and welcome. A December chill set in on Wall Street. Stocks started the week and the month lower, following a strong performance in November. Sentiment was dampened after a new report on the manufacturing sector showed activity contracted last month. Optimism also faded after President Trump said that China still wants to make a deal, but then added, quote, "We'll see what happens," end quote. The Dow Jones Industrial Average fell 268 points to 27,783. The Nasdaq was down 97, and the S&P 500 slipped 27. Bob Pisani takes a look at today's market decline and what might lie ahead.
Stocks fell for a second straight day on this Monday after Thanksgiving, weighed down by weakness in key economic data. Early on, better than expected manufacturing data from China and Europe set a positive tone for stock futures. China's factory activity expanded for the first time since April, but that was quickly tempered by a miss on manufacturing back here in the United States. And add to that a tweet from President Donald Trump announcing steel tariffs on steel and aluminum imports from Argentina and Brazil were back on. It's not a huge mover of the markets, but perhaps still adding to some of today's nervousness. U.S. steel stocks were up. Today's sell-off was led largely by industrials. They tend to be closely tied to global manufacturing and technology. Big names in the S&P, your Apples, your Facebook, Amazon, Googles, they were all weaker on the day. Keep in mind, December is a very bullish month, the best month of the year, in fact. The S&P is up 1.6% going back to 1950. Of course, December last year was the big exception, but the general consensus that we're going to avert another December disaster this time around. Why is that? Because unlike last year, the Fed is in neutral mode. It's not hiking. And the markets are betting on some kind of partial U.S.-China trade truce in 2020. And despite the U.S. data today, global growth appears to be bottoming, at least for the moment. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Let's turn to Christina Hooper to talk more about the markets and what she sees ahead for this month. She's Chief Global Market Strategist at Invesco. Welcome back. Good to see you again.
Good to see you.
I don't want to imply anything, but I did hear a lot of talk about December of last year when the Dow fell by 8.6%. And here we today lost another 1%. With that backdrop, what are you expecting this month?
I actually wouldn't be surprised to see some kind of pullback if we get more negative trade news. But that doesn't mean we should finish the month down. After all, we have one factor in the market's favor this year that was not in the market's favor last year. And that, of course, is a far more accommodative Fed.
So, Christina, the trade war between the U.S. and China and the continuing talks seems to loom very large over the market. And you're of the opinion that a phase one trade deal is almost certainly factored into the market.
I do believe that. The market has exhibited way too much optimism about the U.S.-China trade relationship. And so I think it really is setting itself up for disappointment.
So what are the movers for this month that you're watching carefully that'll get your attention?
I think foremost is going to be trade. And it's actually not just U.S. and China, although that's, of course, most important. But it's also about trade relationships beyond just China. Of course, we've heard that President Trump wants to raise tariffs on some goods from Argentina and Brazil.
Right.
There's also the potential for putting some tariffs on European Union goods. So this is an environment in which protectionism is increasing. Add to that, of course, the very bad news that by next week we're likely to have not enough appeals judges in the WTO to make decisions. That could lead to vigilante protectionism.
And very quickly, how important is the jobs picture? And do you expect to see an impact from the trade war?
Absolutely. The jobs picture is important because what is so strong, what is powering the U.S. economy is the consumer. but the consumer is fairly vulnerable if the employment situation changes. And so we want to follow that jobs report very closely. So far, jobs have been a real positive for consumers. But if we start to see companies making decisions in terms of diminished hiring or even some firings, that could really change the picture for the consumer.
Indeed. We'll see what happens. Christina Hooper with Investo. Again, thanks for joining us, Christina.
Thank you.
As Bob mentioned earlier, President Trump wants to put tariffs on Brazil and Argentina, potentially opening up a new front in the global trade war that's been focused on the U.S. and China till now. Kayla Tausche has today's developments from Washington.
En route to Europe with no trade signing summit on tap, President Trump was characteristically cryptic about whether a Phase 1 deal with China would in fact be done this year.
The Chinese are always negotiating. The Chinese want to make a deal. We'll see what happens.
In London, where NATO leaders are meeting this week, the security threat posed by China, Huawei, and 5G will be atop the agenda. But here in the U.S., tariffs are looming for $160 billion in consumer goods made in China. And a delay for those is no sure thing, as the president hardens his stance against Beijing, signing into law a bill backing Hong Kong's protesters, and tightening other screws on Brazil and Argentina, supplying China with a growing amount of soybeans. Mr. Trump says that's thanks to massive devaluation of their currencies, which is not good for our farmers, and says he'll restore steel and aluminum tariffs on those countries in response.
I gave them a big break on tariffs, but now I'm taking that break off because it's very unfair to our manufacturers and very unfair to our farmers.
If the goal is to shift agricultural sales back to the U.S., analysts say that strategy could backfire.
What we're in danger of, however, is he may be responding to these two countries growing closer to China, but by imposing these tariffs, he could drive them closer still.
The White House has yet to release a presidential memorandum that would formally enact this policy. It's unclear when those reimposed tariffs on Brazil and Argentina would go into effect, or whether negotiations could avert them. For Nightly Business Report, I'm Kayla Tausche in Washington.
Spending on construction projects unexpectedly fell in October. Activity was dragged down by a decline in apartment and multifamily home building. According to the Commerce Department, construction spending fell 0.8% from the prior month. Economists expected a gain. The decline is due in part to a drop in investment in private projects, which hit a 3-year low. And that pressured shares of the home builders, which fell in today's session.
On the East Coast, the first major storm of the winter has arrived. It stretched from the Appalachians up to Maine. It's expected to dump more than a foot of snow in some places, and it obviously came at a bad time for those traveling back from their Thanksgiving holiday. But for retailers, it may translate into more spending. With some schools closed, the storm kept many at home and possibly online. Shopping on this Cyber Monday is expected to set sales records. Courtney Reagan is at a Walmart fulfillment center where packages go from your computer to your doorstep.
Ready, set, shop. Today is expected to set records for online sales. That's on top of records set on Thanksgiving and Black Friday. Shoppers are forecast to spend nearly $9.5 billion shopping online on this Cyber Monday, 19% above last year, and the most ever spent online in a single day in the U.S. The 5-day stretch from Thanksgiving through Cyber Monday is estimated to pull in nearly 1/3 of all holiday digital sales. Walmart expects that today will be one of the biggest days of the year for e-commerce orders. This is just one of 6 U.S. fulfillment centers in charge of getting those orders out the door. It covers 1.2 million square feet. There are 12 miles of conveyor belts. Once an item is ordered, from the time that it is picked, packed, and shipped, it can be out the door in less than an hour. A number of analysts are calling out Walmart as an early winner from the holiday shopping stretch. Consumer data analytics firm Captify says so far, Best Buy, Walmart, and Costco are among the most searched retailers on both Black Friday and Cyber Monday.
Best Buy, big winner. Walmart and Target, big winner. It was all the big box players. Dick's Sporting Goods, a big winner. I heard Lulu mentioned earlier. Lululemon was a winner this holiday season. It's almost like big box, off price, also won. I think the department stores is still a little bit slower.
Sports apparel is another early winner, according to Fanatics, the world's largest seller of fan gear.
We've been up 26% from Thursday to Sunday. The two leaders have been NFL and NCAA. They're up actually about 40%. They've just been crushing it. This was the first year where we had a Black Friday was the biggest day in the company's history, bigger than last year's Cyber Monday. It's never been like that before.
Just as Black Friday's timing has shifted over the years with sales pulled forward into Thanksgiving, Cyber Monday's peak hours have changed too. The highest sales volume used to happen during the day on Cyber Monday when consumers had access to high-speed internet at their desks. With smartphones and that access all the time, the peak sales volume is expected to be around 10 p.m. Eastern to 2 a.m. Eastern, when kids are in bed and the day's to-do lists are done. For Nightly Business Report, I'm Courtney Reagan in Bethlehem, Pennsylvania.
It is time to take a look at some of today's upgrades and downgrades. Deere was downgraded to underperform from neutral at Bank of America Merrill Lynch. The analyst cites the company's disappointing earnings report and outlook. The price target is $150. The stock fell more than 1.5% to $165.29. Wells Fargo was downgraded to underperform from market perform at Raymond James. The analyst cites lingering stigma from the fake account scandal. The firm has no price target on the stock. The shares fell 1.5% to $53.62.
Roku was downgraded to underweight from equal weight at Morgan Stanley. The analysts there cited the potential for a slowdown in revenue growth for that company next year. Price target $110. Shares fell by 15% to $136.07. And Biogen was downgraded to underperform from neutral at R.W. Baird. The analyst cited the company's controversial Alzheimer's drug that is awaiting FDA approval, which the analyst doubts it will receive. Price target now $250. That stock fell more than 2% to $292.39.
Still ahead, Boeing set lofty goals for December, and the company's to-do list is long.
The U.S. Trade Representative is reviewing the possibility of raising tariffs on various European Union products. The trade rep cited a lack of progress in resolving that dispute over aircraft subsidies, which you may recall was affirmed by a World Trade Organization decision. That decision said that European subsidies to plane maker Airbus harmed the U.S. aerospace industry.
Boeing begins a big December. The company has set a target of getting the 737 MAX recertified by the end of the year. But as Phil LeBeau reports, a lot has to happen over the next 4 weeks for Boeing to hit that goal.
It's crunch time for Boeing and the beleaguered 737 MAX, which has been grounded since March. Boeing CEO Dennis Muilenburg has said for some time he expects the MAX to be recertified by the end of the year. But increasingly, analysts are questioning that timeline.
Boeing put out a press release, I guess it was about a month ago. There was 5 steps that they had to go through. They had completed one of those steps.
Among the hurdles facing the MAX, human factors testing, where pilots experienced the redesigned 737 in a simulator. By mid-December, we could see the plane's certification flight. Even if that goes well, new rules for pilot training still need to be published. And there will likely be a 2-week comment period before those rules are finalized. In addition, the head of the FAA, who is a licensed pilot, won't approve the redesigned MAX until he flies it. Bottom line, the MAX may not be certified until January.
Our expectation is that the airplane, on average, will go back into service in March. And the U.S. probably first, and then the Europeans will follow, and then the Chinese will probably follow them.
For now, Southwest, American, and United, who all fly the MAX, still plan to put it back in service in early March. And so far, Boeing has not changed its plans to ramp up production of the MAX next year. Keeping that production schedule in place is the reason Boeing stock has held up relatively well this year, despite a crisis that has dealt a serious blow to the company's bottom line. Phil LeBeau, Nightly Business Report, Chicago.
Shares of Apache get drilled, and that's where we begin tonight's market focus with the oil and gas producer releasing an update on a South American oil project that investors found disappointing. Instead of disclosing whether it had actually struck oil, the company simply said it's still conducting more tests. The project is considered Apache's best chance at jump-starting growth. Apache stock fell 12% today to $19.54. Newmont Goldcorp set a $1 billion stock buyback program. That implies a repurchase of as many as 26 million shares, or about 3% of the shares outstanding. The program will be completed over the next 12 months. Newmont shares were up about 1% to $38.74.
The FDA is speeding up review for a new use of Merck's blockbuster cancer drug, Keytruda. The agency is likely to decide on the application for use in bladder cancer in January. Keytruda is already an approved treatment for a wide range of cancers, projected to bring in more than $11 billion in sales for Merck this year. Merck shares were off a fraction to $87.04, but they did hit a 52-week high during the day. And Disney's Frozen 2 set a Thanksgiving holiday weekend record. It took in more than $120 million in North American ticket sales. That broke the previous record set in 2013 by The Hunger Games: Catching Fire. Disney was down a fraction to $150.62.
One of the biggest demographic questions heading into the 2020 presidential election is how the young voters will affect the election. Polls show that they have the power and influence to reshape debates about the economy, and that's gotten the attention of Democratic presidential hopefuls. Here's Robert Frank.
The split in the Democratic Party over taxing wealth is being driven mainly by age, and younger voters who say billionaires didn't earn their wealth and could be a threat to democracy. A poll by the conservative-leaning Cato Institute found that a majority of voters under 30 said the rich made their money by taking advantage of others rather than earning it. That compares with only about a quarter of older voters. Younger voters are 3 times more likely to say, quote, it's immoral for society to allow people to become billionaires. Younger voters also far more supportive of having the government redistribute wealth by taxing the rich. Nearly 2/3 of younger voters support taxing the top rate at 70%. The question is whether this is particular to this generation or whether people in their teens and 20s have always opposed large wealth. Today's millennials and Gen Z voters came of age during the Great Recession, and many are now loaded with student debt and struggling with high housing costs and health care, which have hardened their views of the wealthy.
Americans now, particularly young Americans who make up the largest part of the American workforce, are people who came of age during the Great Recession, and that was an extremely formative experience that has in some senses set them back.
But most generations take a softer view of wealth as they grow older and build wealth themselves. In 1978, a majority of people under 30 also thought the income gap between the rich and the poor should be reduced by raising taxes on the wealthy. But the age gap explains why Elizabeth Warren and Bernie Sanders are getting strong support from younger voters, while Biden and the more moderate candidates are attracting the older voters. For Nightly Business Report, I'm Robert Frank.
So how will this split between the younger voter and the older voter in the Democratic Party impact the economy over the next decade or so? Joining us to talk about this is Ed Mills. He is a policy analyst at Raymond James. Welcome back, Ed. Nice to have you.
It's great to see you, Sue.
So you think that this is kind of an underappreciated risk at this point. So what are the economic ripple effects, do you think, of this situation?
Yeah, and I think it's an underappreciated risk from the political perspective, because this is really a political story, a market story, and probably most importantly, an economic story. So what you have is a debate going on is that if you were to implement this wealth tax, which is actually hugely popular in polling data, what does that do to the economy? Does that disincentivize different folks from investing in the economy? Does it incentivize wealth flight from the United States? Or conversely, does it incentivize folks to work outside the home because that money that is going to be collected from the wealth tax could go to pay for health care and child care? Could people buy more homes because they are going to be reducing the student loan debt that the millennial generation is overburdened by at this current time. So that's the debate here in terms of the economic impact going forward.
By contrast, though, the president is talking about the possibility of a tax cut 2.0, maybe in the next couple of years here, which would benefit the middle class. Does that resonate with the younger generation as well or not?
I don't think so. I think what you see is that, what we've had for a generation in our politics or longer is that Republicans have always run on tax cuts. Democrats have frequently run away from the conversation. What is different about the Democrats who are running for president right now is almost uniformly they're all calling for an increase in taxes. So what I think the president is doing here is he'd like to set up this contrast between his policy and Democratic policies. But ultimately, I think a lot of voters will say, well, if there was the need for this tax cut, why wasn't that a larger part of tax cuts 1.0?
Indeed. On that note, Ed Mills with Raymond James. Thanks, Ed.
Thank you.
And coming up, some year-end tax tips, how you should use the next few weeks to get your financial house in order. So with only 4 weeks to go until 2019 comes to a close, now is a good time to make some moves that might save you some money when you file those taxes in April. Our senior personal finance correspondent Sharon Epperson joins us tonight with some year-end tax tips, one of your favorite times of the year.
One of my favorite times of the year, definitely.
So what has changed this year compared to last year that might help with tax savings?
Well, there are three big changes. One has to do with alimony. If you got divorced this year and it was finalized in 2019, alimony payments are no longer going to be deductible if you're paying them. And if you are receiving them, they no longer count as income, so you're not taxed on it. Another change is in medical expense deductions and the threshold there. That is increased now to 10% of your adjusted gross income, so you have to have unreimbursed medical expenses over that amount to get that deduction. That's going to be significant for many people. And the health insurance tax penalty has been eliminated. So people who don't already know that, if you don't have the health insurance for 2019, you're not going to get that penalty that you did in years past.
In 2018, the doubling of the standard deduction was big news. I remember you being on the set and talking about it.
Yes.
Any changes to that?
So it's gone up. It's gone up even more, a little bit more.
Okay.
It's just a few $100s for single filers as well as for married couples filing jointly. The thing to keep in mind, though, is if you're close to that edge in terms of the standard deduction, which is $12,200 now for single filers and $24,400 for married filing jointly, if you're near that edge and you could possibly get itemized deductions, now's the time to boost those deductions. So there are a couple of things you want to think about in trying to do that. Prepay some bills if you can, whether that's a house payment or that's state and local income taxes or property taxes. Talk to your tax advisor to make sure it makes sense, because there are caps there, but that's something to consider. And then make bigger charitable donations this year so that next year when the standard deduction goes up even more, maybe you'll take the standard deduction, you'll itemize this year. And with those charitable deductions, you can do that with the donor advised fund. You don't necessarily have to pick the charity right now.
Look at you. You're all excited about all this.
I really am.
What if
I want people to save money.
What if the standard deduction is your best option, but you're not planning to itemize? Then what?
So the first step always is to check your withholding. Just make sure you don't get any surprises in April. Make sure you do that. The next thing that you want to do is look at your 401k, at pre-tax contribution to that 401k, IRA as well, although you have to April to do that. But by December 31st, make sure you're maxing out as much as you can with the 401k. Prepay tuition on that class you want to take for next year. You can maybe get a lifetime learning credit for it. A credit is a dollar for dollar write-off on your taxes. You want to get as many of those as possible.
We got it all in.
We got it all in.
Good job.
Excellent.
Sharon Epperson, always a pleasure to have you.
My
Thanks.
pleasure, my pleasure.
And before we go, here's another look at the day's final numbers on Wall Street. The Dow fell 268 points to 27,783. The Nasdaq was down 97, and the S&P 500 slipped 27. And that is Nightly Business Report tonight. I'm Sue Herrera. Thanks for watching. We'd like to remind you this is the time of year your public television station seeks your support.
I'm Bill Griffith, and we thank you very much for that support. Have a great evening. See you tomorrow.